Okay, so now we're live for this new session for the marketplace by Windor presented by Quanix. So today we have with us Corinne Pohlmann, who's a Senior Vice President in National Affairs and Partnerships for CFIB. So our friends at CFIB, as you guys know, well, we're automatically members with CFIB when you're a member with Fenestration Canada. So today we have Corinne with us to talk about uh, anything related to COVID and what's the support provided by a different level of governments. So Corinne, I'll let you take over at this point.
Thank you, and thank you again for inviting us to be here today. There's a lot going on, of course, as everybody knows, due to COVID, and I know there's a lot of information circulating out there due to COVID, and so we wanted to take some time today to maybe walk you through some of the more important programs that are available that may be of interest to you as an organization. So we try to keep this up to date. This is actually part of something we're trying to do for our members on a weekly basis. So if you are interested in the content here, we do try to update every week information through our webinars, then you're welcome to join as well. So I just wanted to make you aware of the fact that we know information is changing rapidly. It continues to change fairly rapidly. We are what's looking like going into potentially a second wave or already in a second wave in certain parts of Canada. And as a result, government programs are changing too. I will answer as many questions as I can, but please know that a lot of these answers are already up on our website, which we update on a regular basis, as you can see here. Also, if there's a question that you have or you're not able to get answered today, or you didn't hear the answer today, when you're listening to this later, you can certainly call us at our helpline, 1-888-234-2232, or ask us on our website, and we'll definitely try to get back to you with the answers to your questions. So before I really jump into everything, I also want to provide a very important tip we've been providing to all of our members as we go through this pretty incredible and challenging time. First of all, and mostly, is to make sure you're keeping a business log or a journal of everything that's going on. That's really key information for your business. This is going to be super important as you go through this, because obviously you're making decisions that maybe have been different than you would have made normally. It could be decisions around, bills that you have to get paid or defer. It could be around conversations you're having with your staff or your suppliers or with government, and even your own reflections on the business, maybe things that you've learned. All of this may become helpful to you a year from now, even as you look back on this, or you need to sort of share information with a government entity, so that you make sure to keep that log going so that you can have something to refer back to. And it also can help you, like I said, put some reflections on the business itself and your experience throughout this incredible time. So before we jump into it too, I also wanted to share with you some data. We at CFIB do survey research on an ongoing basis. One of the things we've been doing right from the beginning of the pandemic is understanding what the actual lay of the land is among small and medium-sized companies across Canada. This is our recovery dashboard. We update it every 2 weeks now, and essentially looks at how many are open, fully staffed, and normal sales. So as of November 3rd, about 66% of businesses in Canada are now fully open. That was down to about 20% in the spring. 42% are fully staffed, but only 28% are back to normal sales. So there is still some work to be done in order to help a lot of small businesses get back on their feet. And so that is what we're going to talk about today. So we're going to talk a little bit about what's new. There's a couple things that happened in the last week or so that I want to update you on, and then we're going to do a bit of a deeper dive into the three major government programs, one of which is the Canada Emergency Rent Subsidy. That one is actually not yet available, but will be shortly. So I'll share with you what we expect it to look like and how it's going to work. The Canada Emergency Wage Subsidy, which has probably been one of the biggest and ongoing and most expensive programs the government has introduced. It has gone through a number of changes, so I will share with you what the latest changes are and how it works now. And then the Canada Emergency Business Account, which has probably been the most accessed program, and that's the $40,000 loan. It too has gone through a number of changes, and there's some more to come on that front as well. And then we'll jump into your questions. All right, so what's new in this past week? Well, the government has introduced and has passed legislation to create the Canada Emergency Rent Subsidy. In the same legislation, they're also making updates to the Canada Emergency Wage Subsidy. Now, this legislation known as Bill C9 has passed in the House of Commons, but that was week before last. It's now in the Senate. So we have that two-tier system in Canada, and so it has to go through the Senate now. We're hoping to see the Senate pass it by the end of this week. They did last week, which is a break week, do a bit of a study on it with their National Finance Committee, of which our President Dan Kelly appeared as a witness, to talk about the importance of Bill C9 and why it needs to get passed and what maybe small changes will need to make it even better. We're hoping, now they can't really do anything with this Canada Emergency Rent Subsidy until this legislation passes. So again, we're hoping to see it pass the Senate by the end of the week and therefore become law, not soon, very soon after that. And then hopefully the Canada Emergency Rent Subsidy program will open for applications before the end of November. We don't know for sure that's going to happen, but that's what we're pushing for. The government also released backgrounders, which is additional information on the Canada Emergency Rent Subsidy we call SERS. You may hear me say that every once in a while. The Canada Emergency Wage Subsidy, or I call SUS, some people call it Qs, you know, so we'll see. But it's whatever, either way, it's meant to talk about the wage subsidy. And in this program called the lockdown support, which I'll talk about in a minute. The other thing, of course, that's been happening now right across the country is there's been new openings, though very few of them, and many more closures that are affecting businesses in Ontario, Manitoba, British Columbia, and Alberta. And large parts of Quebec remain in the red zone. They've been in that red maximum sort of critical level for quite a few weeks now. So joining them are all of Manitoba, and BC and Alberta have had some closures. They're not quite as extreme. And then Ontario is sort of a mixed bag. There's been some opening. For example, where I live in Ottawa, they've started to reopen some things, whereas in other parts of Ontario, they've had to shut down. So we're going to jump into each of the programs now. And the first one I want to talk about is this Canada Emergency Rent Subsidy. It's the one we get the most questions around because, of course, first and foremost, it's not yet available. However, in order to prepare for it, the difference between the Canada Emergency Rent Subsidy and a previous rent program, which was known as the Canada Emergency Commercial Rent Assistance Program, is that this new program is going to go directly to tenants. The old program, also known as CECRA, the Canada Emergency Commercial Rent Assistance Program, was only delivered through the landlords. And that wound down at the end of September. And frankly, it was not a very successful program. A lot of landlords didn't want to or couldn't use the program because they also needed to have income for themselves and their families in order to sustain what they needed to sustain in order to continue to move forward. And so it just didn't really work in that form. So we were pleased to see it wind down. And now they're introducing this new one, which is going to go directly to the tenant. It's the tenant that will apply. It's going to be up until December 19th, 2020. Basically, any business that experiences a revenue loss can claim a rent subsidy of up to 65% based on the amount of revenue loss. So if you're somebody who's used the Canada Emergency Wage Subsidy, some of this may sound very familiar because it is going to be very similar. It's actually going to be delivered through the CRA as well, which is another big change from the previous rental program. So in addition to that maximum of 65% potential subsidy for rent, which based on the revenue loss, there's also going to be something called a top-up or a lockdown support, which is actually a top-up of another 25% on top of that. So if some businesses are required to shut down, that could cover up to 90% of the rent in a given month. This only will cover rent from October forward. And some kind of rent subsidy, though, will be in place until June 2021. So this formula I just described, and I'll get to in a bit more detail in a second, is the formula from now, which will be the end of September, so October 1st until December 19th. And then from after December to June, there'll be some sort of program. We just don't know what it looks like yet. There is going to be a $75,000 cap per location and a $300,000 expense limit per company with multiple locations per month. So there is no sort of cap on overall how much you get. So if you have many, many locations, but there is a sort of expense limit per company per month that you can get. And again, as I'm mentioning, it's not quite available yet. Now, we kind of knew all this going into last week. What we learned last week was a few new things. That included the fact that they will not cover expenses related to residential property used by the taxpayer. It doesn't cover payments made between non-arm's length entities. Now, we get a lot of questions around this particular one. So we don't have any more details other than that statement that it will not cover payments between non-arm's length entities. So we'd have to learn a bit more about what that's about in order to answer the more detailed questions. And that we just don't have yet. And finally, it does not cover mortgage interest expense on property primarily used to earn directly or indirectly rental income from arm's length entities. So essentially any kind of rental type of arrangement. So how will it be calculated? As I talked about, it is going to be basically based on a 0.8 or 80% of whatever your revenue loss is to a maximum of 40%. So here you have, based on your revenue loss on the first column, if you have a revenue loss of say 20%, 80% of that is 16%. So basically, because you're not eligible for the top up, you have to, in order to get the top up, you have to have at least a 50% basically revenue loss. So if you only have a 20% revenue loss, you're basically going to get a 16% subsidy amount for your rent for that month. However, if you had a 60% revenue loss, so you're above that 50% threshold, you're still going to get that 40%, which is the maximum you can get under the 50% revenue loss. Plus, you then get whatever the increment is over 50. So from 50 to 60 is 10. And you multiply that by 1.25. So then you add the 12.5 to 40, and you can get a a subsidy of 52.5%. There you can see all the different numbers based on the amount of revenue loss that you can get. So up to 50%, the maximum you can get is 40%. Once you get over 50% of a revenue loss, then you can go up as high as 65%, which you reach once you have a 70% revenue loss. So that is basically the chart on how the different rent subsidies will work. The only exception, of course, is if you have a shutdown due to a public health order, then you can get up to a 90% subsidy for the periods which the business is required to shut down. And we'll talk about that also in just a second here. So a few other additional details I wanted to share with you on the rent subsidy. First of all, the rent subsidy will cover commercial rent, property taxes, which includes school and municipal taxes, property insurance, and interest on commercial mortgages. However, sales tax components of any of these costs would not be included. So that's an important distinction. As I talked about that lockdown support, which is that covers you up to 90% of the rent subsidy, this will only apply if some or all of the activities of the business are required to cease due to public health order. And so it's sort of a few different sort of caveats to this. So if it's going to be, it's only going to apply if you're required to shut down part of your business or all of your business. You have at least 25% of your revenues coming from that part of your business, and you've been restricted for at least 1 week. Then you can get up to the 90% rent subsidy. So a good example of this is restaurants with indoor dining. So if you're no longer allowed to do indoor dining, you'll now be eligible for that particular rent subsidy. Now, it doesn't mean you're completely shut down. You may still do takeout and curbside pickup. However, because the indoor dining represents at least 25% of your revenues, you'll be able to use the 90% rent subsidy. Of course, others that are out there may also be able to access this because their businesses have been shut down for some period of time. It will be prorated based on the number of days your business is closed. You have to have that whatever arrangement, lease arrangement has to be in place in writing prior to October 9th. And you have about 180 days or about 6 months post the time that of the period that you're applying for to apply. Two other quick caveats: you have to have a payroll account as of March 15th, or having a payroll service provider involved, and you have to have a business number by September 27th, 2020 in order to apply. And the other weird thing about this particular program is you have to apply through My Business Account. So My Business Account is a CRA portal that allows businesses to access its own sort of private information. And this is where this particular program will be accessed. So some key takeaways about the new rent subsidy. This program will allow more business to become eligible. So that's the big difference between this one and the last one. Not only is it going to be available to tenants directly, the last one you had to have at least a 70% revenue loss in order to access this. This one doesn't have that any kind of criteria. This one is going to be eligible to any type of business who has suffered any kind of revenue loss. Obviously, the amount of revenue loss will dictate the amount of subsidy. Again, I'll reiterate, it's not yet available. We're still waiting for approval, as I mentioned, from Parliament, but CRA will be the one administering it. And in the meantime, if you are interested in this program, we encourage you to make sure you have access to My VA. and that the people who manage your payroll, for example, or for all those things that apply on the business's behalf, have the proper authorities to do that for you. If you don't have MyBA, then I encourage you to get signed up on it as quickly as possible. All right, so let's talk a little bit about the Canada Emergency Wage Subsidy. So this was first introduced back in March, and it was at that point in time a flat 75% wage subsidy for anyone with a revenue loss of 30% or more. It was basically a cliff. Like you had 30% or more, you got it. You had 30%, you had under 30%, you just didn't get anything. They did change that in July, and it was so that the amount of subsidy now is going to be based on the amount of revenue loss in the business. And for July and August, you were able to choose between the old formula of having a 30% get 75%, or the new formula, which allows anybody who's less than 30% to at least get some part of a wage subsidy. However, starting in September, all the wage subsidies now are based on that revenue loss component. So it's really based on how much of revenue loss you have at the business. Their current legislation, which is winding its way through the House that I talked about, is what it's doing is it's freezing the Canada Emergency Wage Subsidy at the current rate, which is again about 80% of the amount of revenue loss to a maximum of 65% when the top up is applied. Now, sounds very familiar, very much the same as the rent subsidy. Same as the rent subsidy, that particular formula will be in place now till December 19th. But the government has also announced they're going to continue the wage subsidy until June of next year. So we're going to have opportunities to hear more about what's going to come after December, probably, hopefully before January, and we're pushing them to do it as soon as possible. I wanted to reiterate, though, that even though there's legislation pending on this, the applications for this current period, or sorry, for the last period, so it would be for the month of October, that's called period 8, are open. And that they're based on the rules of the prior period and not on the current legislation that's out at the moment. You can apply, though, and then make amendments if needed once the legislation has passed. So it's sort of up to you how you want to do it. My sort of guidance on this has been there shouldn't be any need to make amendments, though, if your current or previous month's revenue loss is less than 50%. It's only really affecting businesses that have a revenue loss of more than 50%, where it may become a bit more attractive to potentially use some of the changes that are coming in the legislation, because what they did is in order to get that top up to 65%, you had to base it on your 3-month average of the previous 3 months. And they're now giving you the option of basing that top up on your current or previous month's revenue loss only, similar to what you do for the base. And that change allows you to choose which of the two you want to use. And so that's the only reason why you may have to make amendments if you have a greater than 50% revenue loss. If you have less than that, you should be fine to do the applications now. So a bit of a deeper dive on wage subsidy, just to remind everybody, because I know this is probably the one that's most likely used by many of you that may be listening. To be eligible, basically nearly all businesses are eligible for the wage subsidy as long as they have a business number before March 15th or a third-party payroll provider. You have employees who are on a payroll who receive a T4 slip, and that includes anybody new that you hire too, as long as they're arm's length from you. You can't be a family member that you hire after March 15th. If it's not a family member, you can include new hires into your wage subsidy. And you meet the revenue loss requirements for each claim period. So those are the different claim periods that I just talked about earlier that you can see on the chart. Started at 15%, then we went to 30% for the first 4 or 5 months. Then we had the period during the summer where you could choose out of the old system or the new system. And now we're in this, we call the new SUS, which will take us to December 19th, which will be based on your revenue loss. And from December 20th, basically till June of next year, we don't know what it's going to look like yet. So that's what we're waiting to hear more about. How much could your business receive? Well, as there is really no maximum dollar amount the subsidy a business can receive, but there is a limit on how much you can receive per employee. So this table shows you where those maximums come. So as you can see here, it's actually based on the amount of EI. It's the maximum insurable earnings that they call them on the EI system, which is around 58,000, and that's what this is based on as well. So as you can see here in period 1, you can see the maximum rates that you could possibly get. and then the maximum weekly benefit per employee that you can get as a result of that. So all of this is based on a maximum weekly earning of $1,129. So when you take 75% of $1,129 per week, that's $847. If it's 85%, it's $960, and et cetera, et cetera. So that's where the maximum comes in. So it doesn't matter how many employees you have, but you are limited on the number or the amount per employee that you can claim. So this chart is really just to share with you what the maximum amount of wage subsidy rate that you can get. So this is again based on the current, not on the current, but on all the different periods up till now. So it gives you some sense of what the maximums were. As you can see, from periods 1 to 4, it was really 75% only. 5 to 6, the maximums kind of changed as you went from when you had it based on your revenue loss. However, the amount was different. So the maximums were 60% back then if you were at the maximum amount of revenue drop. And since then, it's been coming down slightly. For the last period here, periods 8 to 10, you, and actually for that matter, from periods 5 to 10, you then add the top up part to it. So as you can see here, if you got a maximum revenue loss back for July and August, you can get 60 plus 25, that'd be 85%. And so forth, 50, 75%, 40, 65%, depending on the period in which you're applying. So there has been a bit of a reduction in the wage subsidy or maximum amount of wage subsidy you can get over the course of the last couple of months. So I'll move to the next slide and just give you a bit of the key takeaways that you may want to think about from on the wage subsidy. So it's really important to note that any revenue loss can make you eligible for at least some wage subsidy. So we're encouraging businesses to look at this, even if they have a smaller revenue loss for this period of time. It may still be worth getting some of the subsidy so that you can continue to hold on to your people and pay them as you would like to. In order to apply, what you really need are two things. You need to know the amount of your revenue loss in the current or the previous month compared to that same month in 2019. Or you need the average earnings, you compare it to the average earnings of January and February of 2020. So it's kind of up to you which of the two you want to use. However, if you use one, you have to stick with it for all of the periods for which you apply. So if you choose the same month in 2019 as this year, you have to stick with that approach going forward. For some of the newer businesses, January and February makes more sense for them. And so that's why they've given that alternative approach. You then have to look at how much did you pay each of those employees during the period you're applying for. And this can include, as I said earlier, new arm's length employees. So even new hires can be used in this regard. So it's really just your revenue loss and how much did you pay each employee, and then you apply the formula to that. So that's essentially what you need. The government, or if you go to the CRA website, they do have an online calculator. They also have some spreadsheets, but the online calculator, basically this is what they're going to ask you for, and then they do a lot of the calculations for you. You need to reapply every month. You can't just apply once and think that's going to happen every month. The government needs to know how much you paid employees that previous month in order to give you the proper amount of wage subsidy. So you do have to unfortunately do this every month that you need it. However, you only need to do it for the months that you're eligible. So if you miss a month, say 1 month you actually didn't have much of a revenue loss, or you were actually making slight profit, you don't apply that month, but then the next month it goes back down again because things are getting worse again, you can reapply again. It doesn't have to be consistent every month. You can just choose the months for which the business is eligible. So that's an important distinction as well. All right, I'm going to move on to the last of the 3 programs I wanted to touch on, and that's the Canada Emergency Business Account. Now, the Canada Emergency Business Account has probably been the most used. As you can see here, it's been used. Almost 800,000 loans have been approved since it was first introduced. It's the $40,000 interest-free loan, of which a quarter of which, $10,000, can be forgivable if repaid by the end of 2022. This has been very popular, as I mentioned. You have to apply for this. This has probably got the earliest deadline of all of these programs. You have to apply for this by the end of the year if you are eligible for it. So there are a number of different elements and parts to the SIBA, what we'll call SIBA program. And I've listed them all here. So the original SIBA was actually having somebody who has payroll between $50,000 and $1 million. pressure from groups like CFIB and others made the government quickly realize that maybe that was a bit too narrow and they needed to broaden the parameters of which this was applicable. So they replaced that with what they call now SIBA 2.0. And this is what we also call the payroll stream component of SIBA. And that's actually for people who have payroll between $20,000 and $1.5 million per year to apply. And I'll talk about what that looks like in a second. Then there's the next program called the SIBA 3.0 program, and it's known as the non-deferrable expense stream. It's for people who can't access the payroll stream because they may not have payroll or payroll big enough to get in. Those folks have to show that they have non-deferrable expenses of more than $40,000 per year in order to get $40,000. Now, I will share with you a little bit more detail on how that one works. More recently, they announced another one, which is SIBA 4.0, which has to do for those people who have personal bank accounts. And going out with this program, I think government learned, as did many of us as well, that a lot of business owners still have personal bank accounts. And one of the criteria had been that you had to have a business bank account in order to apply for this program. So what they did on SIBA 4.0, which has only been out about a month now, they are allowing people with personal bank accounts to open a business bank account and then apply using either of the two other streams I just talked about, the payroll stream or the non-deferrable expense stream. And then finally, there's another program coming called SIBA Plus. And what this is the government is planning to provide an additional $20,000, of which half of that, 50%, again, another $10,000 will be forgivable for those who've already received a SIBA loan. So I'm going to talk about that a little bit as well. Key thing here is, though, it's not yet available. Again, we're hearing before the end of the month it should be available. We're hoping that's going to be true, and that's what we're waiting to hear more about. All right, just a quick deeper dive on all of these. It's important to note all of these programs you have to apply through your bank or your credit unions. Whatever your financial institution is or you have your business bank account, that's where you apply. So for the payroll stream, all you need is that you need to show your T4 summary for 2019 to qualify. So that's that summary you get for all of the employees that work for you for which you give a T4. You show that, it says you have payroll between 20,000 and 1.5 million. That's all you need to do. The non-deferrable expense stream, however, is quite a bit more complicated. For that one, you have to actually upload documents proving non-deferrable expenses of more than $40,000. The other key thing is that in order for them to be recognized, those non-deferrable expenses have to have been incurred between January and February of 2020, or you have to have had a legal contractual obligation prior to March 1st in order for them to be used as eligible non-deferrable expenses in the context of this particular payroll stream. Listed here on the slide are some of those non-deferrable expenses the government will recognize as long as they were incurred January, February, or you have a legal or contractual obligation to them. It could be wages or other types of employment expenses, so say for contract workers. This is what has been the tricky one, where we found out a lot of folks may not necessarily have a contractual agreement in place prior to March 1st, but they do use people on a regular basis post March 1st. So they've been sort of getting caught in that particular weird rule. Capital equipment used for business purposes like machinery and computers, insurance, fees like professional fees, software licenses, things that you need to sort of put your product together. So livestock feed, ingredients, raw materials, utilities, property taxes, that kind of thing that have not been deferred, those can also be included. So those are some of the things that you have to prove. But I know it's been a frustrating experience for many business owners in this category to try and do so with government. So that's those two. The third one, as I mentioned, or the SIBA 4.0, they call it now, is those with personal bank accounts. In order to get those, you have to open a business bank account. And the important thing is you don't have to open the business bank account at your primary financial institution. You can go to a different one if you'd like to do that. It's recommended that anybody who may be flipping from a personal bank account and trying to get SIBA to go through the pre-screen tool, which is available at the SIBA website. And that's to make sure you qualify. It's not required to do, but it's probably a good idea, because if you open a business bank account and then you apply and you're still not qualified, then you've opened a business bank account for no reason. So this way, if before you do that, you know you'll be qualified, then you can go ahead and open that business bank account. So once you have that open, you can then apply for SIBA through one of the two streams I just described. So finally, SIBA Plus is the new program that's going to be coming out shortly. It will provide an additional $20,000, of which half, $10,000, is forgivable. What we understand about this is that it's going to be basically available to businesses that have already qualified for SIBA and received the SIBA loan. You can then apply for this additional $20,000. You'll likely have to do a second application to get it. But from what we understand, it should be fairly automatic as such if your SIBA loan was granted previously. If you have not yet applied for a SIBA loan at all, you will have to apply for both separately. You can't just do it once and think you're going to get $60,000. You're probably going to have to apply for the first for the 40, and then you can apply for the 20 after that. Again, as I mentioned, we're hoping to see this out before the end of November. That's the latest we've heard, that they're really pushing to try to figure out how they can do that, and that's what we're hoping to see. The one thing that we do understand is that there will be an attestation requirement. So you're going to have to attest that you've been negatively affected by COVID-19. But we don't think there's any expected extra documentation to prove that. And we don't know what that means. If you've been negatively affected, does that mean over a certain period of time, just generally speaking? So that none of those details have really come out yet. All we know is that there will be an attestation component that will require you to say that, yes, I've been negatively affected by COVID-19. How they're going to potentially follow up on that later, we don't know. So those are the details we're still waiting for to understand. All right, that's my deeper dive into all of the various emergency programs. I know it's a lot of information. I know it's complicated. You may or may not have questions for me now, but just in case, I want you to refer you back to our resources. We're here to help with anything that you may need, and whether it's our website, our helpline, our social media feeds, our email updates, webinars, please let us know, and I'm happy to take any questions if there are any.
So live right now, we don't have any question. Maybe if we give a couple seconds, but yeah, as you said, you have the informations here. So, I'll invite all members to take advantage of that because it's included in your membership with FENCAN. So take advantage of these resources. And, like if we have people that are watching this as a recorded webinar, I mean, this is most likely still good information. So yeah, so that's it. I think at this point we'll end the webinar, and we'll just thank our sponsors. So Quanex for presenting sponsors, and Everlast, Veka, and ScreenCo as gold sponsors. So thanks everyone, and I guess we'll talk to you again, Corinne, in a future webinar.
Thank you, and thank you.
Bye-bye.
Bye-bye.